All right, so thank y'all for jumping on today. A little bit less traditional of a Wednesday weekly sales meeting. I wanted to bring to attention a lot of the updates from the market. We've got new weekly market updates. We've got a lot more information that's been available to us, both from a national level and from a GGAR level. So I want to shoot through that in as much detail as you guys want. But first, we do have a special guest tuning in from outside on the patio with a wine glass that has iced coffee in it.
Yeah, it's not wine, coffee.
Annie is here for a brief little bit just to talk about some of the new updates for Twin Oaks, and I'll let you take it away.
Hey guys, it's good to see some of y'all. Haven't seen you in forever. I just wanted to remind everybody that we're here to help during this time and kind of talk about a couple things. Don't forget, we've got the attorney hotline. Some people have been using that since, stuff's a little different nowadays. We also sent out a letter of intent last week that came out of a masterminds group for CDJ, and it's basic. Has anybody used it yet or seen it yet? I don't know, but
yes.
I'll send it again after this Zoom, but it is a great placeholder, kind of is a good way to describe it. And Richard, you can talk a little bit more about it if you have a better explanation, but it's kind of like a placeholder for a listing agreement or a buyer's agency agreement. It's a really good way to have a more legally binding agreement for a buyer or seller that's a little apprehensive because of all the COVID stuff going on, rather than just like a verbal commitment that they want to list or buy with you at some point. So it's kind of a way to protect yourself and make sure that they're going to want to move forward with you at some point. And that was put out, last week. Nelson and Galbraith helped us write that up, and it's just for CD and Joyner agents. So I highly recommend using it if you have anybody that is a little unsure, but is also, ready to start a conversation about buying or selling. And then we're also still doing outside closings or accommodating clients any way we can. And y'all will see something from me probably on Friday about a panel that we're doing virtually with an attorney and a CPA to just address a lot of questions people have right now about kind of how, this is affecting you from a legal and accounting standpoint. And that'll be via Zoom. I'll send out an invite, but we'd love y'all to attend, and it'll be a Q&A format. So we'll have questions kind of before, but then as we're doing the Zoom, you'll be able to pop on and ask the CPA and the attorney specific questions that you might have about your business. So it should be a good little learning opportunity next week sometime.
That's great. Thanks, Annie. And I'll get with you after we get off just so we can communicate everybody the documents that they may or may not have seen or missed, and then just a reminder for everybody else. So we can kick that off next week.
And I'm going to stay on because I haven't been to a sales meeting in quite some time. So y'all will still see me here, but I'm not going to say anything.
We're just going to be jealous of you on the patio right now. That's exactly what's going to happen.
Okay, perfect.
We're glad you're here.
Good to see y'all.
Okay, so again, like the pressing issue on everybody's mind is how's the market? And really right now, I know that we've gone over how to utilize information, the power of information. Information is your biggest trust creating touch point right now. And if we don't know what's going on, really we can't navigate the difficult conversations that a lot of people that are unsure as to whether or not, do I push the pause button? Do I press play? Do I really need to sell my house or buy a house right now? Is now a good time? What's happening? They're looking to us for guidance on that. And as a result of that, since we're coming to the end of the month, we've got a lot of data to be able to share. And I just wanted to briefly go through how to access most readily all of that data and at least what the most current set of data is from a national level and from a GGAR level. And then we're going to talk about what the second most formative question on everybody's mind is. Let's talk about recovery. What does the recovery mean? And how do I navigate that conversation? So, really, I hope beyond hope to give you guys two takeaways from today's short little session. And then what we're also going to do, Jennifer has dropped into chat. If anybody has any new listings to share, obviously we can't do the traditional Caravan setup, but if you've got anything new to share that you want to, drop it into Caravan so Jennifer can access it. And then we will go through that at the end before we do some roundtable discussion and maybe some questions. All right. So really two key takeaways. One is I just want you guys to understand that right now there's a lot of fear and uncertainty. That's not something new. That's not something that I haven't said 550,000 times to every single one of y'all over the last 6 weeks. But bad news sells. There's a reason why news outlets choose to focus on bad news is because it gets eyeballs. They don't make money if there isn't something that's going to elicit the first response that's in our 2 million-year-old brain, and that's fear. Knowledge overcomes fear. Real news is a trust builder. Just the understanding that real news, and the more informed that we are about the real news, the more we can actually go out and serve our clients in the marketplace. Now, I mean, seriously, there are people that have a better understanding of the plot line of Tiger King right now that are real estate professionals that claim to be agents. They have a better understanding of the plot line of Tiger King than they do of what's happening GGAR, NAR, in their own backyard from a statistical perspective. I mean, that's freaky. It's also unnecessary. And it's also not any of the people that are on this call. Y'all are on this call because you know that the housing industry is going to pull this economy out of its current situation. And let's just go ahead and address that. The current situation is we are in a recession. Point blank, period. There's new economic data that GDP decreased at 4.8%. Numbers for Q2. That's the worst quarter that the United States economy has experienced since, you guessed it, the year 2008. The difference is in what created the problem. Now, what I'm going to hope to do is give you guys some information and some takeaways. I'm going to give you all of the slides. Feel free to take as many notes as you want to. I'm going to give you guys all the slides, all the info, all the links to where I'm culling all the information from on a daily, weekly basis. I mean, seriously, it's got to be that much because it's changing by the hour. So give you that, and maybe hopefully some things will click in your head for some action items to take out into the real world now, immediately. Okay. So let's share, and here's drum roll, please. This is everybody's favorite part of the show where I screw around with all this. All right. So, like I said before, how's the market? Being the voice of reason and knowledge in a fairly uncertain time. Where do we start with that? National market data, understanding where the country is beneficial to us because it gives us a high-level perspective of where we really are. Area market data. And now I'm going to share with you too a very exhaustive monthly report from GGAR that you can get from GGAR's website that goes, everybody loves our little area number map, but this actually could be pretty darn useful for you in this time to actually drive down by area, by area, by area to actually see what is going on in a specific area. If you're looking to farm North Main, downtown Greer, Simpsonville, whatever it might be, you can do that. And I'm going to show you how to get there and what to look for. And finally, we're going to talk about the recovery. What does that look like? It's a question that's looming on everybody's minds, and I want to get to that. But until we talk about recovery, we got to talk about how's the market right now. So in the national market, what I want you guys to do is take a look at the next two graphs and know that we're trying to follow the bouncing ball. What does that mean? Let's start here. Okay. Your weekly average for showings this time last year, we were trending slightly above. So this year's trend line, obviously the gold line, 2019, the black line. This is data pulled from showing time. And what you'll see is immediately around the time that all of this really hit the fan, you see a ski slope, right? Well, now all of a sudden you see a rebound that looks very, very, very much like a not return to normal, but you're watching an exceptionally big trend line going back upwards. Now, what that translates into, I feel like, and you guys tell me if you think something different, but what we saw was everyone stopping, taking a deep breath, looking around, trying to assess the situation. Things fell off at a very rapid pace. But then slowly but surely, while some people still choose to stick their heads in the sand and not conduct business, what you're seeing is that the seasoned professionals, the trusted advisors, the people that actually have their ear to the ground of what's actually happening in the marketplace saw, hey, wait a minute, there's still a lot of transactions that are happening right now. There's still a lot of business that's being done. Okay, how are they doing it? Whether it's pivoting to digital online showings or utilizing all of the tools and systems that we have in place to be able to take a deal from listing to sold without ever having to touch a single human being. Whatever that was, people started to slowly realize that, you know what, I think we can actually find a way to make this work. And it's showing in, literally in showings, because now the right people are getting back in touch with their clients, helping cull the fear and helping find a way for them to move forward. So yes, where we are right now, we're down about 40%, that peak from last year, down about 42% in showings. Well, the interesting thing that you can pull out of that is we're down 42%, but there's still 60% of the showings. More than half are still occurring, even at the peak of everybody going, I don't know what's going to happen. We still don't know what's going to happen or where it's going to go, but we do know, and we can follow the numbers. And people are realizing that there are still ways to do business and conduct showings and buy and sell homes right now. And so let's go to NAR market data and statistics. That's, showings are great. That's fine. If showings are great, but nobody wants to buy, okay, then you're going to have an issue there. That's a different topic for a different day. But what you've got is NAR market data and statistics. And what I can unequivocally say is that my assistant is overpaid and underworked. But from this perspective, existing home sales, you're looking at that number right now. This is from NAR, month over month in March. It's confirming what we already knew. Yes, March take a big hit, 8.5% down. April is likely to take a similar hit, but year over year, still, we're almost 1% ahead of where we were at the same time last year at the end of Q2. So what's going to happen right now, at the beginning of Q2 rather, what's going to happen? You see median sales price up 8% year over year, and yet our inventory is now less than 3.5 months. We know that that's not a sustainable thing from a home selling perspective, because we know that the government is going to see that the construction industry and the home building industry is going to be crucial in leading a charge out of the recession that we are currently in, because that makes up the construction industry, and the home building industry does make up a pretty significant chunk. Obviously, hospitality and service workers are the main bit of the people that have been affected from an employment standpoint, but construction workers make up almost a quarter of the industries that have been affected by the lockdown. So let's peel that back, but let's go a step further and turn to this quote. Pending sales turned positive the week ending April 15th and is up 6.2% week over week as of the week of April 19th. You're all going to blink when I show you who said that. That's the chief economist for Zillow. But what that means is that one of the largest aggregators of information, take it for what it's worth, one of the largest aggregators of information for real estate in the world is actually showing that while March had a bad time, the first half of April, likely, probably a little bit worse, but there is now showing an increase and a consistent increase week over week as of the week last 2 weeks ago now. And this was put out on April 23rd. So that means that there is an uptick. Does that mean that we're out of the woods? No, not at all. But what it does mean is that sales are happening. Inventory is still very low. The construction industry and the home building industry are going to be vital moving forward. And that sales are trending positive. So things are still happening. It's just whether or not we are participating in them. Now, let's dive down to area market statistics. You guys have seen this graph. What does this mean? Well, it essentially confirms the same exact numbers that we saw from the showing time report nationwide. And this doesn't provide as much context, but what it does provide is showing you that day over day, the trend line went down from the end of March before. Now you can see a significant spike back up to the levels that were there not a month ago. It really means that things are actually happening. And so I apologize for the granular nature of this. Apparently when you snip stuff from GJR and you don't remember to save it as the right image file, things can be a little grainy. So I apologize if you can't read this, but know that there's only a couple of key pieces here in the next few slides. One, this is March in comparison to 2018, 2019, and 2020. Notice that while we are not yet to the 2018 level for new listings, we are trending somewhat positive. 2019 was, last year we were very, very, very stressed for inventory. Now, hopefully this year, we can, once things do return to whatever level it is that they can return to at whatever time that is, we can begin to bring the inventory that the market needs. But what we're also seeing is year to date, there's still a very healthy positive trend line about listings. You can see roughly 2.5% year over year. So now we're in a good place. And what that does mean is that things are still, while they are not necessarily for whatever it might be worth, things are not zooming. They're not supposed to be zooming right now, but they are moving forward in a positive way. Next piece is closed sales. March. Now you're looking at an interesting statistic. Despite everything, GJAR wide, we were up 9.2% for actual sales closed in a given month. And year to date, up almost 13%, 12.8%. What you're seeing is that despite all of this, business is still getting done. And I think the most telling graphic here is, look at the circle. Median sales price for March is at its highest level since in 2018, experienced a 12.3% jump. But a lot of people would say that 2016 or 2017 really was one of the best times for price acceleration. But what you're seeing right now is that even here, even amongst all of this, you have a median sales price. That's not average, that's the median, which gives a little bit better of a representation of what's actually happening in the marketplace, just because you omit the extremely low value and the extremely high value properties, which tends to kick out average sales prices. But average sales price still has its place at the table. So this is all of GGAR. That was just Greenville. So all of GGAR on a year-over-year data metric. So that's 2019 to 2020. What we can say are the following. These are the facts. The amount of sold units is up 10.4% at this time through the end of March. It's not been done through the end of April yet. We are up 10.4% year over year from 2019. The volume, total dollar amount, is up 21.5%. The average sales price is up just a little bit over 10%, but I wanted to round down in that situation because average tends to throw things out of skew, but it still has a seat at the table. And our average days on market are 66 thus far year to date. How that compares to 2019, the average days on market, 65. Basically the same days on market, one day higher. And the last thing, this is probably the most interesting thing for me in terms of how do we talk to the clients, because a lot of the talk right now is all of these different reports that have come out, and I'm going to reference one that's probably the most referred to. It's, what about this recovery? When are we going to come out of this? When are we there's a lot of, are we going to come out fast? Is it going to be, and people are throwing out U-shape, V-shape, W-shape, check mark, tick box, Nikes, whatever it is. This is not about predicting the future. It's about understanding what the facts are about what different types of recoveries mean. And while I'm not an economist, there's a lot of those, and there's a lot of them with a lot of opinions. It's our job to just take a step back and see what the people that are asking us questions understand about what the different types of recoveries are. Now, the first thing really to look at about a recovery, what are we going to do? We got to look in our backyard, right? And so I was able to take part in a very productive conversation yesterday with the Greenville Chamber. And it was all about how do we get out of this? And this was one of the pieces shared yesterday. And while there's a lot of data there, and you guys are going to be able to see this in the slides, really the things that you can pull out of here are, one, what businesses are seeking and the most needed types of assistance for people. And right now, people are looking for the cash to cover their businesses. That's the big concern. Expenses, paying themselves and employees. Two, customers. So now we're having to pivot and do business differently. A restaurant is having to do takeout only. Attorneys are doing curbside closings. Real estate agents are doing FaceTime showings and virtual closings. And I mean, the list goes on and on and on. You've got retail stores just opening up the door, tossing the bag out there, you get it and you go on. You're seeing the people that are pivoting the fastest and the most effectively really shining during this time. Not going all out, but shining. And then confidence. That's a thing that comes with knowledge. Confidence is being lacked right now because there's a lot of uncertainty in this world. And that confidence for a recovery, which that's what we're going to talk about. And that's what I really 100%, you might think that I'm crazy, delusional, or what have you, but I really do firmly feel like the housing industry is going to lead the charge out of this recession. And I firmly believe that. But the more knowledge we can bring to the table determines how and when we get out of this. The final thing is communication, and that's what you guys need to be doing now more than ever. Over communicating with everybody, not trying to blow things out of proportion or minimize the negative impact of some aspect of this whole entire situation that we're dealing with, but just having the facts and being open and honest and communicative. And really the most needed types of assistance, you guys all know this, people need money, help, costs to cover payroll, costs to cover expenses, loans, trying to make ends meet. We all know about PPP, PUA, take alphabet soup all over the place for the different types of aid that has been administered to the people that are in need. That's kind of the primary concern that a lot of people have. And the next is advice and how to plan and prepare for the future. Now, really, honestly, I want you guys to understand that I really feel like that the real estate industry, we are stewards of our clients' financial future. I mean, we're almost the financial planners. So the quality of that advice that we're able to give during a time like this is paramount. And the quality of the advice that we can give is determined by the amount of knowledge and information we can use to then educate the people. And workforce assistance, obviously right now, if you're dealing with a hiring, if you are, if you're a brand new business that just opened your doors 6 weeks ago, I can empathize with a really good friend of mine who just opened an event space downtown. And, my heart goes out to him. Thankfully, they're able to keep things going from an adaptive standpoint. But what if you don't have any staff to be able to run things right now? What if you're dealing with layoffs, furloughs, like many of the larger corporations around here? That affects our business just as much as it affects their business. So being top of mind of the people that we're working with, if they're experiencing that sort of a thing, now is the time more than ever for us to be able to give solid, sound, factual advice on how best to proceed or not. And that's okay too. And finally, marketing, essentially what marketing means is it's just another way of saying the right way to communicate with the people that are in our community, helping people understand that it's okay. It's going to be okay. It might stink. It's going to be hard right now. It is hard right now. Let's be honest. It's different. Different is hard. But different doesn't have to mean done. And so really to the point of the recovery, I know everybody's probably seen this slide. This was a Reuters poll that was taken of 45 economists in the United States and Europe. Now, spoiler alert, there are almost 4,000 economists between the United States and Europe. And we got 45, a sample size of 45. Now, a lot of the talk was about shapes of recoveries and how recoveries are determined. The V shape, obviously, is what most people were pointing to begin with at the outset of this. What a V-shaped recovery is, I'm going to stop and say, now is the time to understand what each of these mean. And then what we can do is talk to our clients about, well, what do you think? I heard it was going to be a U shape. I heard it was going to be a W. What does all this mean? I'll give it to you in as simple terms as humanly possible. A V-shaped recovery is defined as very dramatic dip into recession. Recession means 2 consecutive quarters of negative GDP growth. Essentially what that means is the business model for the entire United States doesn't expand, it contracts for 2 separate quarters. Drastic decline means that it drops more than 2% in a given quarter. It's also defined by having a very dramatic increase in GDP growth upon the bottom of said recession. That's a V-shaped recovery. So again, V-shape, dramatic decline for 2 consecutive quarters, more than 4% each time. We are just above the 4% each time. So we got dramatic decrease, dramatic increase for 2 consecutive quarters afterwards. That's what most economists have pointed to. Now, the thing is that economists, for lack of a better word, are now being tasked with doing their job and then a couple of other people's jobs, mainly psychologists and doctors. What does that mean? It really means that what we're dealing with is not something that they can go by. Economists like historical data, because historical data tells them, well, you know, when this thing happened and that thing happened, then the result in the past was Y. Well, right now, we don't have that historical data so that economists can really take a brainiac look at how are we going to get forward. Because what we've got is real economic data, yeah, that we can quantify. We can't qualify it, though, because it relates to health data and social data, meaning, okay, yes, sure, we'll open back the economy up. Does this disease come back? Do people feel comfortable going and shopping at a big rate? Economists really don't know how to predict that, and we certainly don't know how to predict that because we can't really predict the behavior of people. We can just do the best that we can. So as a result of that, a lot of people are now pivoting to some modified version of a U-shaped recovery. Now, what's a U-shaped recovery? It is a moderate or gradual decline of GDP for the 2 quarters to go into the recession. It is a much slower slope than a V-shape. Well, I don't know how we're going to come out of this, but I do know that we went in pretty sharp. So I'm not sure that the validity of the U-shape holds water because our decline wasn't gradual. You know, we didn't see the iceberg for 6 days prior to actually slamming into it. We slammed into it at a moment's notice, right? So while I can't say that it's not going to be a U-shaped recovery, all I know is that the conversation with someone, if you're having a conversation with a client out in the world, is, well, you know, it's really interesting. Tell me what your understanding of these different types of recoveries are. I mean, and this isn't me just giving an opinion of a V-shape does. No. This is just economics. I mean, and if you want to look up the pure definition of what these recoveries are, it's as follows: V-shape is a sharp decline followed by a sharp increase. U-shape is a gradual decline. The check mark, I don't even know what that is. Honestly, I've gone through 100 different economic textbooks. I think what people are actually trying to say is that it's going to be kind of like a little flat thing here and then a long rise up to the top. I mean, and those are the optimists. And if you saw the recording from last week, you know that the optimists eventually get burned out. The next thing to consider is a W-shaped return. Now that's something that I feel like, wow, that is the minority opinion here. I think what is coming into view for a lot of economists and a lot of people with a lot of smart money right now, still some of the biggest money managers in the world are still pointing towards a V-shaped recovery because of the underlying going in metrics, you know, the sharp decline. This W-shape might hold some water with it. While again, not predicting the future, I think what people are not sure about is how long we're going to kind of bounce around before things eventually really pick up steam. Now, is that June, July, August? Putting a finish line on this race is not productive for any of us. It's just knowing the facts and being able to say, at the end of the day, I don't know, but I do know what did happen. We had a pretty sharp decline because we were told to stay home, not because something else happened. Once things reopen, based on a couple of different factors, and now it's really economic data, what actually really can we show for in terms of GDP growth or businesses reopening, business growth, business development, money being made and churned around in the economy. The health factor, do we have a relapse? And the social portion of it. Will people feel comfortable getting on airplanes, going to hotels? Staying in Airbnbs is a huge question mark right now. What will people feel? So that's all I got right now. I will shut up. I'm sure that everybody's going to be super happy for me just to shut up for a second. And at this point in time, I'm going to open it up for everybody else for any new listings. I know that Bill dropped one in there at one point, and I think we might have a couple of more. But I'll unmute anybody that wants to chat. And Bill's ready. Look at you even adjusting your shirt. All right, you're ready.
Well, anybody wants to build a house down on the Saluda River, Lake Greenwood, 1.7 acres, Terrapin Point. Already been permitted for a dock and had a perk test done. 74.9.
Right on.
Hey, and I'm going to tell you something else. I'm doing photos tomorrow for a house up in Travelers Rest. It's going to be a 3 and 2, listed at $199. So if anybody's looking for a Travelers Rest, $199, 3 and 2, 1 level, 2 sheds and a fire pit in the backyard. So that'll be coming up Friday.
Travelers Rest.
Yeah,
Where in Travelers Rest?
It's about 10 minutes from North Greenville University. You know where Nate's Pizza and Wings is, up on 414?
Okay.
It's right by Nate's.
All right.
Oh, thank you for that. Look at that. Man, I took that picture.
Sorry, there's a delay on the screen, Jerry.
Oh, thank you for that. And that's it. That's it. That's all I got this week.
Let's see.
This is Carmen.
That's me. So,
All right, Carmen, go for it.
I was going to say this is so crazy because last week I listed this and we have had 0 showings. And a week before that, I had one in this price range and similar, and we had 20. So if y'all have somebody, this is a great house. It is 4 bedrooms, 2.5 baths. They're the only owners of it. And it's over in Bridgewater in Simpsonville. And it's beautiful. So please show it and sell it. Did I freeze?
Nope, you're back.
Okay, sorry. I'm having a lot of internet issues. But yeah, all the better years. Yeah. But it's a great house, so please show it.
Bill, I don't know if you saw that, but Chris Kelly just sent a message to you about restrictions on the lot. So asking about a tiny home, potentially.
I'll get with her on that. Thank you for that. I didn't see it.
Here, Carmen, this is Ravona.
Okay, this one is going up today. It's over in Forester Heights. It's going to be $349,900. This is 4 bedrooms and it's 3 full baths, 1 half bath. And it's, I'm trying to think what else. There's a 5th bedroom. It's huge, but we put that as a bonus. But the master has a big sitting area. It's another great house. So please show it.
Right.
Anybody else have one they want to share that I need to pull up?
I mean, I just got a 114 Keith Drive. It's been on the market for a little over a month now. We just lowered the price 10 grand. It's a little over 1,200 square feet, 3-1 on a full unfinished walkout basement. That if you were to finish it off, it'd add another 1,100 or so square feet to the house. Brand new deck on the back, new roof. Great location, right up East North Street. So yeah, should do it.
Awesome. Okay. Anybody got any questions or want to talk about anything that I rolled through earlier? I know that was a lot of talking and not a whole lot of listening. So if you want to roll through that, by all means.
Richard, I was just going to say that all that information is so helpful and great, and thank you so much for giving us that information. But I also want to say that I think that, you know, we're going through some difficult, trying times right now, but I think on the other end, we're going to come out so much better, and I think some really good changes are going to happen in the future.
I couldn't agree more, Beth. I could not agree more. I think that, you know, the people that have gotten in there and shown that we can still do business right now, even though it might not be all unicorns and lollipops, it's made way for the people that are really committed to this business.
Carmen, are you still in there? Did she leave?
I'm here.
No, I was going to say, this is only a prediction, but what did Donna Smith say? Richard, you probably heard it. But what
in our masterminds, Bill, you might remember better, but Melissa asked Donna Smith to tell us what is going on. You know, she predicted about the recession back in 2008 and 9 and said, Melissa was like, Donna, tell us what is going on. And she was like, you know, in May, you're going to kind of slow down a little bit. In June, things are going to start picking up. By July and August, you better get ready because everybody in those hot spots are coming down here. And so she was saying that it's going to pick up and be crazy. And what's crazy about that is one of my best friends had a house behind her for sale off Augusta Road, and it was 1.2. And she texted me the other day and said, somebody from New York just bought it and it's coming in hot from New York in June. And I didn't even tell her what Donna said. I just thought that was kind of crazy. So I guess
Absolutely.
Yeah.
if we can hang in there, it's going to be good.
It's 100%. It's looking. It's looking at the light at the end of the tunnel and trying to figure out if it's light at the end of the tunnel, or do you believe that it's a train coming for you? And you know, like I said about Airbnbs, for real, and anybody with short-term rentals or Airbnbs or those types of markets and people that you got in those metro areas, like what I was talking about last Friday. Those are all opportunities right now. Think about how many people are going to all of a sudden decide that they want a nice big old lake lot like Bill's got, or are they going to say, I'm getting out of this city, I got to find some place to go that's got some grass. So I mean, right now, you know, rural property may see a historic year. I can't predict it, but I mean, I'm thinking, what would the person that's really currently being squeezed right now, that's really being affected by it, what are they going through? And how do we help them? Because it's time for us to up our game. Y'all are right. And get informed, get out there. I'm going to share everything with you guys in terms of all of the slides, all the GGAR stuff, and links to how to get there. But if nothing else, you know, always feel free to contact me with anything. If you've got some situation and you want some advice or guidance, I'm right here for you. But just know that NAR is producing weekly statistical reports. GGAR is trying to put out as much data as they can right now. You know, I know you're all getting these daily updates and there's not a whole lot of meat and potatoes in there, but creating a habit of using that data to your advantage, just building your knowledge base, but also to checking in on GGAR statistics. Showing time is a resource. Inman News, if anybody's familiar with, Inman News is an exceptional resource. It's more of a national level. Finally, Keeping Current Matters. I mean, how good of a name is that right now? Keeping Current Matters. And that's what we got to do. We got to get informed and get out there and go do. And then even to great resources like GSA Business, the Greenville Area Development Corporation, GADC, has great resources. And then also to the Chamber has some excellent information to piggyback off of. All right, guys, thank you. I know that was a little bit longer than normal, but hey, still under 45. I'm kind of